The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your competence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Today we are going to be reviewing the last few months of some of the best playbook trade setup first red day trading examples. First red day in page 58 in the playbook, we'll also be going over some 3-day setups that coincide with some of the different variations of the first red day, the 3-session setups, and of course the basic model for trade entries. These are all right out of the playbook. Nothing has changed. The same setups, rinse and repeat every single week. I want to rehash that quote that I have in the playbook. Although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it is absolutely sure it can catch its prey. It may hide in the bush for a week, waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope, preferably one that is sick or lame. Only then, when there is no chance it can lose its prey, does it attack. And that to me is the epitome of professional trading. Mark Weinstein, one of the market wizards. Now I want to review the importance of the first red day trade setups. Number one, if you have a basket of instruments from different areas, obviously cross rate pairs, major currency pairs, gold, oil, and indexes, my objective is to hunt out the same setups every week on any instrument. Now, obviously, different instruments are going to have different volatility and different risk-reward types of scenarios. But when the other time frame traders are driving these moves, meaning longer time frame traders, there is more strength behind those setups. It allows me to typically, for some of those, take profits, but also hold some of those positions because they will typically drive into the close of the session or the day. They show up in every session, but depending on the basket of instruments that you're trading, for example, you may have more British pound, euro cross pairs associated for the London session. Again, Asian cross pairs for the Asian session. I trade the US session, and on larger time frame moves that are driven on a 3-session setup, I will typically be targeting a basket of instruments and only looking for 1 or 2 of these opportunities in a week. They show up on any instrument and they repeat over and over again. But most importantly, because they are driven by other time frame traders, they are scalable in size, meaning that I can continue to increase size, not risk, but size. As your account grows, you can continue to trade the same high probability opportunities with more size. Rinse and repeat. That is the goal. First red day setups show up again and again and again. And just so everybody knows, this PDF has been added into the first red day, first green day section. It's titled First Red Day Trade Examples from 2024 inside of your course. So I'm going to run through some examples. There's going to be some currency pairs. We've got cross rate pairs. I'm going to show the same things on crypto. Indexes, oil, it shows up in any instrument, any market. We have an example here. These are 30-minute charts of the Swiss franc Monday, Wednesday, Friday templates. So we'll review that for a moment. So reviewing again, Monday, opening range, day 1 of the new week. Tuesday, day 2 forms our initial balance. Typically, we'll also expand the range. This is the front side. Monday, Tuesday, Wednesday, day 1, day 2, day 3. The front side of the week. We can see opportunities on that front side, and we'll go through a couple of examples of those. And then Wednesday resets as the midpoint range of the week and becomes a new day 1 heading into the closing range of the week and the backside. Day 1, day 2, day 3, the closing range of the week. And the question obviously is, what type of weekly template am I in? And in this example, we're looking at first red day, which are pump and dump type of templates. We'll be going over the first green day in the next video. Emphasizing again that these are scalable setups, me not trying to trade a market every day and catch moves. I'm looking for the scalable opportunity driven by other time frame traders. And which is why I emphasize to traders over and over again, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. One of the biggest reasons traders are inconsistent is they try to trade movement every day instead of trading setups where they actually have an edge in the market. So we have our Monday, our opening range, day 2, Tuesday, our initial balance expands the range, continues to go higher before closing ever so slightly below the open of the high of the day, the opening price of the day, forming a first red day, a peak formation high, and closing at or just below the opening price. And again, I'm going to show some different examples of different types of first red days that will show up in any market and have different variations that traders can learn to spot to identify an opportunity as we move throughout the week. So we have our 30-minute chart. We go to our next day. I'm trading the US session. We have our rectangle inside of a pattern where we have our first red day signal. Our universal entry criteria is met right into the open of our US session window for a parabolic collapse. Again, reminding traders there are two types of opportunities: reversals and trend trades, and they will present in one of two types of templates on the day itself. And that will either be a pump and dump template on the day or a dump and pump template. Now, since today we're focusing on first red day examples, the main thrust of all of these templates will be pump and dump scenarios. We have a first red day. We had day 1, day 2, day 3, first red day, midpoint range of the week. And our signal day is the first red day. We have a pump and dump template aligning us with our first red day thesis. And you'll notice again, this market closes into the extreme. We have an opportunity to take profits at the very low. But this market, if there was a trailer, is held into the low. And that thesis may be that this market may be rolling over if it has yet not taken out the low of the week, or if there's a larger template in place targeting a lower area below the low of the first red day trade itself. Next is the Canadian dollar. And again, these are all examples in the last few months. Different instruments. There were many more, but this just shows traders the frequency of the opportunity when you have a basket and you're patient and you're willing to sit on your hands, how the calendar is used in this scenario to lift the market. We have our first red day again on a Wednesday. Monday, Tuesday expands the range. Inside day, as well as a first red day template for the parabolic collapse on Thursday. Again, same scenario, a smaller pump and dump version into our US window and New York open continuation. And again, understanding that other time frame traders are driving this move, and this market closed at the extreme on the day in a range expansion profit opportunity. Next, we have the Canadian dollar again, 30-minute charts, Monday, Tuesday. This is in April, goes parabolic on major red news. We get an inside day again, a first red day on Wednesday after the FOMC release. So our first red day, signal day, shows up after the Fed. The following day now, thesis is that this market could continue to reverse. Our universal entry criteria short signal after major red news at 10 a.m. for the continuation again into the close. This market closed into the extreme. So understanding that when other time frame traders are driving these moves, this market has the potential now to continue perhaps into the following day. Now, this is a different type of variation. Remember going back and understanding that Friday is the closing range of the week. We have a first red day signal, peak formation, reversal, and close below the open, peak formation high, peak formation low at day 0 template. Day 0, page 84 in the playbook. This is on April 26th. So we have our first red day signal. Our next day is an inside day. On Monday, our opening range of the week. Day 1, day 2. So we have our peak formation high, peak formation low, consolidation. And the inside day is also a potential signal day as well. The inside day, page 69 in the playbook. So the inside day, day 1, our opening range, We have our consolidation inside of a day zero template. The following day on Tuesday, our opening range initial balance, we have our peak formation at the previous day's high, triggering inside day traders on the long direction. We had major red news at 8:30 before creeping back up into 10 a.m. Universal entry criteria engulfments back inside for the continuation in line with our inside day first red day trade reversal. And again, you'll notice this market trades into the close. So understanding other time frame traders are now driving this move, and I am comfortable holding that into the close of the day to squeeze out the maximum amount out of a winning trade as possible. This is an example on Bitcoin. We had April 22nd, a breakout on Monday's opening range, breaking out of the weekend. So a question that I get frequently is, how do you do the day count? Because crypto trades 7 days a week. I do not include Saturday, Sunday. I start the week on a Monday, just like every other instrument. And lo and behold, we get the same opportunities on cryptocurrencies as well. Monday breaks out. Tuesday closes below the open, gives us our first red day signal. Peak formation, high of the week, and closing below the opening price. We head into our Wednesday with a first red day potential signal day. And again, understanding pump and dump or dump and pump type of template. As Paul Tudor Jones says, and I've repeated this, there are three levels that we work from in every single, that I work from in every single scenario. And that is yesterday's high of day, yesterday's low of day. When the week starts, I start from closing price of Friday, and closing price, high of day, low of day are the three levels that I work from every single day. Above the high of day is driven by other time frame traders. Below the low of day is driven by other time frame traders. When this template sets up and the trade setup sets up, other time frame traders are driving this move. Two opportunities to enter this first hour and second hour after the New York Open. And again, you'll notice this market closes into the extreme. So when we have other time frame traders driving this move, I can hold on to this. It's scalable in size, and reinforcing this is not a 5-minute trade entry. We're trading off the larger time frame template. Another example, April 10th, Ethereum. Monday breaks out. We have an opening range breakout, an example again of not counter trending a day one runner. Tuesday closes as a first red day. This market, before we get to it right into our US window, breaks down into the closing price of Friday. It pumps back up on the backside of our week. Wednesday resets as a day one, a peak formation low, a breakout of a low of day level. It does not follow through. There's no first red day opportunity on that day. Major red news takes us right into the closing price. Again, you'll notice where the week starts from. It auctions up, puts in a higher close before auctioning down and consolidating inside of Monday's closing price up top and Friday's closing price below. Day one, day two on the backside. Wednesday, Thursday, we have a day zero template inside of our high of week and low of week, but we're inside of our first red day still. So the market has broken out, high of week, closed as a first red day. We are still trading inside of our first red day heading into Friday. Friday is a day three. Again, there are two types of trades to look for on Friday, Free Cash Friday: parabolic trend trades and parabolic reversal trades. We have a market that has pumped up and collapsed and coiled sideways above the low of week level. We head into our Friday session. We have two types of templates that we can be looking for, either a dump and pump if it was a first green day. We're looking at first red day templates and trade setups. We have a pump and dump template that gives us our universal entry criteria in our first hour, begins to break down and accelerate as the session continues to trade before blowing off in the short direction parabolically towards the end of the day. A little bit of a creeping trend down that eventually blows off, giving traders an exceptional parabolic collapse, noticing that it closes at or near the extreme of the day. This is an example on a cross pair of the Euro Australian currency. Monday trades inside of Friday's range. Tuesday, a double inside day, which again we talk about in the playbook as well, double inside day. Breaks out of the high of Friday into the high of Friday before breaking down and closing as a first red day on Wednesday. Again, remember day 1, day 2, day 3, the midpoint range of the week. We get our first red day signal. That market breaks down into the low of Wednesday before pumping up. Now, when this market pumps up, we pump up into our U.S. session window into the high of the day, and as Peter Brandt talks about, a pattern within a pattern, a smaller rectangle at the high of day before engulfing and breaking down and pumping back up into our New York Open. We're on the backside of the week. We've had a first red day signal. The market triggers shorts into the market early before pumping back up and collapsing and giving us our pump and dump, larger template, a smaller pump and dump into the New York Open for a parabolic reversal trade again into the close of the day. Other time frame traders coming into the market above the high of day, high of week level for the short trade opportunity at the New York Open, and you can hold that into the end of the session. April 30th, May 1st, we had a breakout in the long direction on day 2. This is just from this previous week. Breakout on day 2 that on Wednesday became an inside day and closed as a first red day after the FOMC, breaking down into our new day on the Thursday. We break through the low of day level and pump up into our U.S. session window. We get our little engulfment back inside of our universal entry criteria. So an example again of breakout, pullback, continuation. Markets only do 3 things. We have our first red day and our inside day signal, and opportunity to enter, re-enter, and re-enter again as this market continues to collapse and close into the low of the session. So again, an opportunity to hold into potentially into the close of the session on a first red day reversal opportunity, pump and dump template in our U.S. session. The NASDAQ 100, this is from March 4th, March 5th. Just emphasizing to traders again the different types of variations that can be found. So there are several first red day opportunities if you know what you're looking for. I only trade the U.S. indexes in the U.S. session. 99% of my trades are in the U.S. window. There are opportunities in Asia on Asian pairs. But we have a larger Wednesday, Thursday, Friday into the close of the week. The closing range of the week, day 1, day 2, day 3 goes parabolic on Friday before reversing on Monday. And that's our high of the new week. We get a first red day on our Monday after a large pump day and a consolidation up high. First red day signal heading into Tuesday. This market's already breaking down prior to getting into our U.S. session. We had 10 o'clock major red news. Now, I'm going to talk about this in a future video, how a lot of news, the template takes precedent. The larger time frame template takes precedent. And then as I've explained to traders previously, often can be the catalyst to complete a move, but also understanding a larger time frame thesis allows a first bar or a first bounce entry after the major red news release. So we have our first hour opportunity into the New York Open, a coil sideways into the New York Open for the collapse, and then a little pullback. 10 a.m. major red news continues this move almost right into the end of the session. The last hour pulls back and consolidates, but again, an opportunity to squeeze the maximum amount out of a winning trade down low after a first red day signal on the NASDAQ 100. West Texas oil, again, a larger template Monday, Wednesday, Friday, heading into the new week. This is from end of April into the beginning of May. So we have a market that pumps up into the end of the week and gives a first red day signal, high of week on Friday, which is confirmed on the break of Friday's low of day early Monday into Monday's session. So we have a first red day signal heading into our new week and a peak formation high heading into the new Monday. We get into Monday and the market pumps back up before breaking down in that first hour of our U.S. window. Oil typically, you'll see most of that explosive movement start at 9 a.m. New York time. That is the correlation with the futures trading time and the old pit trading times. But this essentially is the same as a larger time frame death candle. Market pumps back up into our peak formation underneath closing price inside of our first red day signal for our first opportunity to enter the market, a re-entry at the New York Open for the short trade, parabolic short trade after a first red day signal, again closing almost into the extreme of the day. Now this template on a larger time frame, understanding an example of how other time frame traders can be driving a move. We have our first red day trade on the Monday, and in the playbook I talk about how often a second day after a first red day, first green day signal, the first day may go in the direction of the trade but not have as large a move. The following day can be the large move or an even larger move, and we see an example of that in this last week of oil. That follow through on a first red day with a large move on Tuesday, a continuation on Wednesday, again day 3, parabolic trade blowing off in the direction of the trend after major red news. The inventories release at 10:30 and continuing to just break down even on Thursday and Friday in the short direction. The pullback and coil, continuation, pullback, coil, continuation, day 1, day 2, day 3 on the backside. And this is also an example for traders, a question I get, can it trend? Markets can pump and dump and pump, or day 1, day 2, day 3 reset and continue the trend. And we see an example of that. First red day, a first red day trade, a first red day breakdown on Tuesday, a parabolic blow off on day 3 and reset. Day 1, day 2 in the direction of the trend, day 3 in the direction of the trend. First red day is a very, very powerful signal. The most important part to understand, basket of instruments. I'm looking for the same setups on any instrument over and over and over again. Rinse and repeat, scale them up in size. Typically can be held until the close. I don't have to worry about getting in and getting out and catching a move, and I can scale these up in size. Why? Because they're driven by other time frame traders. They have more strength behind those moves, which is why they can sometimes go for day 1 and day 2 and have a follow through after that trade. They can show up on any instrument, and again, they repeat over and over and over again. Keep it simple. Same setups, any instrument, rinse and repeat, scale them up in size. Have a great day, traders. Again, this PDF is available. It's in downloadable and in the first red day section in the Best Playbooks Trading course. Have a great day, and may the markets go with you.